Good evening, traders. It is Wednesday, December 18th, and that means that it's time for our weekly swing trading video. Market's not doing a whole lot in the last few days here. We're in pre-holiday mode. We've had a lot of issues that have been resolved over the course of the last week. We have USMCA, we have a China trade truce, we have a accommodative Fed through 2020, we have a likely Brexit agreement. Economic data points have been good. Everything's coming up roses. So we've got the market floating higher gradually, and we're seeing these little stair step gaps higher, and then the market compresses all day. So you've got doji, doji. Now, not technically according to true candlestick patterns. These are not dojis, but they're close enough for my intents and purposes. They indicate that the closing price is very close to the opening price, which means that there's very little going on during the course of the day. So you got 1, 2, 3, 4, 5, 6 in the last 7 days. Very, very quiet holiday type trading. The market's floating higher. Asset managers into year end are bidders. They want the market to float higher because then assets under management grow and asset management fees are bigger and bonuses are bigger. So I expect to see this continue for the next couple of weeks into year end. There are a couple little things that do concern me. The market's very, very overextended right now, and I feel that valuations are getting a little bit stretched. We're not going to see a big drop unless we see a big spike, a big blow off top. But on a weekly chart, you can see here that there is a trading channel that's established, and the market has poked through the upper edge of that trading channel. Typically, when that happens, we start to see a retracement, and it retraces at least back to the middle of the channel. And so that puts us at about SPY 285. That's a pretty considerable retracement. Now, because this is a weekly chart, it may take 4, 5, 6, 7 weeks for that to happen, but it's likely to happen. Take a look at the daily chart, and you can also see a trading channel. Very similar situation here. We've poked through the upper edge of that trading channel. The likely target here is probably around the 306 area. So my suspicion is that we're going to get an ugly day in here somewhere. We're going to see some profit taking. Stocks are going to pull back. Probably this first dip will be a buying opportunity. We'll try and push to the upper side of that trading range, and then maybe by late January or February, we'll see a more considerable pullback, maybe even to that SPY 285 level. I don't know what could possibly be the culprit, but technically, that's how things are shaping up. We have to be a little bit cautious in here. We've had a great run. We've been able to make a lot of money since really this breakout back here above the 100-day moving average. We had this sell-off right here, and then up in here we started selling bullish put spreads even when the market broke out here, selling bullish put spreads the whole way up. Here we started taking profits on our bullish put spreads. We didn't roll them over until we got a dip, and whoop, there we got dip. Started reselling them here, here. We've had a really, really nice 3.5, 4 months of trading, so we don't want to give our profits back. Right now we've got the market floating right up at the upper end of its range, right at an all-time high. December 20 is Friday. That's a normal option expiration. I would assume that many of you have bullish put spreads that are expiring. If your stocks have run up dramatically, the ones that you've been selling bullish put spreads, don't roll them over. Just wait for a market dip and then sell them. I've been looking for stocks that have not run hard, that are breaking out through technical resistance, still have room to run. Those are my favorite plays right now, and that's what we're going to be focusing on this week. I also think that there's a really nice way to hedge yourself. I'll put that up right now. If you are selling bullish put spreads and you're a little bit overextended, I think it makes sense to have at least a little bit of protection. VXX is a great way to do that. So I suggest buying some VXX. Right now it closed at 1524. It might drift a little bit lower. Maybe it gets as low as 1475 or so over the course of the next 2 weeks. But when we do get a spike, we're probably going to get a spike into that 17, maybe even $18 range. So you've got a chance to maybe make 15% on your hedge, and that should offset any bullish put spreads that get into trouble. So this is a really nice way to hedge your positions. In fact, we did it back in here. We had the market drifting lower and drifting lower. I was starting to get very skeptical in here, so we bought some of these VXX positions, and that worked out really well for us. So we took some profits here, and lo and behold, we started selling some bullish put spreads again because we got that market dip. I'll overlay the SPY and you can see how they coincide. So there's your dip in the SPY, it says gray line, and there's your spike in VIX. And so anytime you get a market drop, option premiums start to inflate, VIX goes up, and that's why this is such a nice hedge for us. And I also feel that there's not a lot more downside to it. It's at a 52-week low, and I don't see it going a whole lot lower. So use VXX as a hedge if you've got a lot of bullish put spreads on. If you don't have that many and you're letting them expire, fine. Have a small handful of bullish put spreads that you're still putting on. Be very selective and know that the easy money has been made into year end. So that's my lesson. And let's take a look at how our trades did last week. We'll go into December 11th bull list. We're going to click through all these right here. ETRN, really, really nice. This is a cheapy stock that I pointed out to you back here on December 11th. The stock was trading probably about $10.75. Look at that move. That's $1.50 move. That's about a 10% return on a stock. I got a cheapy stock for you this week that I think might do well too. I'll always try and include one. I know some of you like to trade stocks, so that was an excellent pick. HOG, we've got the stock higher than it was a week ago. We're keying off of these major support levels, these major moving averages. If you sold a bullish put spread, you're making money on that one. INTC, December 11th, right here. Stock here today, keying off of that support level right there. If you sold bullish put spreads, got a week of time decay, you're making money. PLAB, here we wanted that stock to pull back into the middle of this green bar. Never did, so we never took a position on it, but you can see that it's held the gains very nicely, and it's probably getting ready for its next leg of the rally. So you've got one test, two tests of support, tails under body. I think PLAB moves higher. You've got some tails above body here too, which does show a little bit of resistance, but the fact that it has not pulled back tells me that buyers are lining up on it. So eventually it's bound to take its next step higher. I would not want to buy it though unless we can get it at that 1440 level. So that's neither a winner or a loser. Target, December 11th, stock moving higher, actually getting through resistance. Yes, definitely winning trade there. Twitter, nice, holding its own. There's the December 11th day right there. You can see how it broke out today. Twitter is actually going to make it on our list again this week. I like it. And again, I'm looking for stocks that have nice support, good technical support, that have not run real hard, that have plenty of upside left. Those are the types of stocks that could go. And even if we get a market pullback, there still should be a decent bid for this stock. On the other hand, stocks that have really run hard and are getting lofty in terms of their PE ratios, those are the ones that are going to see the most profit taking right away. Those are the ones that are the most dangerous for us to try and sell out of the money bullish put spreads on. Premiums are super tight and we have to go too close to the money on those. So I don't like the risk reward ratio there. WDC, hello, that was a really nice one. We actually double dipped on that when we were selling bullish put spreads on it here. If you were doing weeklies, you got another chance here. Now you can see from, this was December 11th right here. If you just got long that stock, you did really, really well on it. It's gone from $52 to $57. So really, really nice pick there. Out of all of our positions, all winners. Shouldn't have been looking at the bearish side. Let's see what we had on the bearish side though. December 11th bear. We had AIG. No reason to be looking on the bearish side. And that's where it was on December 11th. You can see the stock has moved higher, tails above body. This 200-day moving average looks like it's going to hold. This would have been a small loser because the stock is higher than it was a week ago. But again, should not be doing bearish picks right now because the SPY did not pull back, and that was the caveat. GME, December 11th here, we had the gap down. Find support on that 100-day moving average. The 200-day moving average is what we wanted to key off of. It's still below it, but I don't think that we would have been selling any bearish call spreads until we got a little bit of a rally. So you want to see what it does right here at this 200-day moving average. If it starts to roll over, then I think you can sell bearish call spreads on that 200-day moving average right there. So there's no real reason to do any kind of bearish trades right now. The market's been floating higher. That's what we expected it to do. We want to have that bullish posture. So stay away from bearish trades. I've only got one bearish trade for you this week. So we will take a look at that. First though, I'd like to remind anyone that's watching this on YouTube that you can get Option Stalker at www.oneoption.com. I release this video to YouTube about 3 days after I record it to give members a chance to enter the trades. Please subscribe to this YouTube channel. I have videos every day that I post, sometimes even two. They have lots of great trade ideas that are very, very timely, and you can take action on them right away. Turn on your notifications and you'll never miss one of these videos. I don't know when I'm going to release them, so make sure that you subscribe to the channel and turn those notifications on so that you can get these trade alerts. Option Stalker, there's a free trial, and I am extending the free trial through January. And if you open an account with Tradier Brokerage, you can take the trial with 0 commissions. And commissions are free even once you sign up for Option Stalker. They're included in the monthly price. So enough of the promotion. Let's get on with some picks for this week. I'm going to go right to them. December 18th bull. So again, remember the type of stock that I'm looking for. Something that has not gone gangbusters, something that still has a lot of room. It looks here like Baidu is actually doing pretty well and it's at the upper end of its range. But when you zoom out, stock's got a lot of room to go. And in fact, you can see it's just starting to get through this horizontal resistance and the 200-day moving average. I like it here. I think that you can, ideally, you'd want to wait for that 200-day moving average to be tested for more than one day. You know, we've just closed above it for the first day. Like to see a couple of more days above it, and if it starts to continue to grind higher, sell that bullish put spread below the 200-day moving average. I like it. We're getting through technical resistance and we have good volume. Sienna, it's been a dog. Look at that. It just sold off, which is another point that I wanted to make regarding the market. You can tell you're in the late stages of a market rally when the dogs are barking. That means weak stocks that have really been pummeled all year all of a sudden get a bid. Buyers all of a sudden start buying it up. Well, it's because assets are rotating into some of these laggards, and so they start popping a little bit. Well, those are the final stages of a rally, and we're starting to see that in a lot of biotech names and a lot of tech companies that really have been lagging the entire year. So another reason to be a little bit more cautious here. Sienna, I like this breakout above the downtrend. I like the fact that it's above the major moving averages. It does not have great option premiums. I would like to see it come in about another 50 cents or so, and then I think you can sell that $39 bullish put spread. But you need to, the 39, 38.50 bullish put spread for January, you'd need to get at least a dime for that. And in fact, in January I looked, I think they're dollar increments in those spreads. So it's a 39.38 bullish put spread you'd be doing. There you want to get at least 20 cents for it. So it's got to come in a bit. I don't even think Sienna is a pick for us right now because it has some work to do. Cisco, another dog. You can see it's got a gap to fill in right here. Pulls back, finds support coming up through this horizontal resistance level. Not one of my favorites, but I think you can try it using the 45.50 level. That's that horizontal support level right there. If you extend it across, You can see it's right there. So it should be able to find and hold some support right around that 45.50 level. So that's the bullish put spread I would sell, like 45.50, $45 bullish put spread. Again, haven't hit my Baidu is about the best that I've seen right now out of the first three. Netflix looks good. You've got this nice strong uptrend. You have the stock breaking through horizontal resistance. You've got good volume on it. It's going to bump up against the 200-day moving average. It may or may not find resistance there. I like selling this 315 bullish put spread. Now I'd go with weeklies. I don't think you'd be getting much of anything for the December 20s, so you'd probably have to go out to the December 27s, which, by the way, if you can get anything decent for the December 27.50 bullish put spreads, 2 days next week, Christmas Eve and Christmas, are going to be non-events. The trading volume is going to be extremely light, so you don't have a lot of news in play right now. No economic news. All the big events are done with. I think this is a pretty decent play, and you see how the stock has closes near the high and gaps higher. Big long green candle, closes near the high, gaps higher. I like that type of price pattern. This is very, very strong, so I do like selling those 315 puts, buying the 312.50 puts. Nice bullish put spread there. RH I put up here because I think it's setting up for another leg higher. You can see the stock has been gradually floating higher. This is a big breakout. A lot of buying in here. Now the stock is starting to compress. It's pretty much held that halfway point on this long green candle, which is good. And you can start to see that buyers are stepping in. They're not taking profits on it any longer. How much of this is buoyed by a strong market? That could be the case. So ideally, we'd like to see a little bit of a green bar here, closing higher in a flat market. That would tell me that the stock's probably ready to go. And if you did a bullish put spread, you'd want to key off of that 210 level with the notion that this opening right here is going to hold. SLCA, here's your cheapy stock. I like it. One test, two test through this horizontal resistance level. Got decent volume coming in at a time when a lot of laggards are starting to perform. This stock has a chance to run. It's got to get through that opening price right there of $6.15. Once it does that, it'll fill in this gap. I think this stock wants to go higher, so I think this is a decent play. The downside risk is very limited. You'd want to use this as your stop right here, which the low is right around $5.15. So I do like this. I think this is going to be a good play. Twitter we've already looked at because we had that spread on this week. I like Twitter again for another bullish put spread. And I think you can key off of this $31 level that was horizontal resistance, now it's support, or you could even use the opening price right there today, which is $30.69, so you would sell the $30.50, 30 bullish put spread. I like it. I think this stock has room on the upside. It might even be just an outright buy. Weight Watchers, everybody's going to be getting fat over the holiday here. They're going to be looking to lose that weight and sign up for Weight Watchers. I'm sure this is a seasonal play as well. I like it technically because we've got this nice horizontal breakout here. We've got a run up. Stock pulls back, tests that breakout, and now it's starting to run higher. A few nice green candles closing on their high. Key off of this support level right here. So you'd want to use the $38 strike price. So maybe a 38, 37.50 if they've got those strike prices available. So I like that spread also. Mosaic was another one that we looked at this week. That one's a little bit out of the gate right now. We're looking at it back here when I did my daily videos. That's been a really nice one. A lot of nice movement in the last 3 days. So those put spreads right below here really working out well. Right here, I don't think you want to go in and sell that put spread right at the $20 strike price using the 100-day moving average. So those are your picks on the bullish side. Let's take a look at the one bearish pick that I have. EXPE. Big drop after earnings. Nasty, nasty. Overdone? Yeah, probably. Stock rallies back, finding resistance right here. Can't get into the gap. Two long red candles closing on their low. I feel that this stock is going to retrace. It's got some natural sellers in there. Some people that did not like this drop and did not like this news are going to be looking to unload more stock in here. I think the stock has a pretty easy path back to the 105 level, so I think it's a good short. Could you sell a bearish call spread here? You could using the 115 strike. I don't think the option liquidity is very good. I take that back. Option liquidity of 2, so it's got decent option liquidity. So yes, you absolutely could try and do that. Hard to believe. We are 1 week away from Christmas. I will not be doing a video next Wednesday. Tuesday is Christmas Eve, so I probably won't be doing one Tuesday either. I'll try and fit maybe a very short video in Monday or Tuesday, just highlighting a stock. I'll try and figure out a way to get another video in there, but it'll be a very short one. I'd like to take this opportunity to wish all of you a very Merry Christmas.